Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, so look, it's been a volatile night, but unless you were short from the Friday close or awake sometime between 3 a.m. and 6 a.m., it was a pretty hard move to catch. The actual China session was really choppy. There's really no volume there. I mean, Asia's not even, most of Asia's not even open, so. We gapped down pretty hard. We did as low as 52.25 after the open. Then they really just kind of chopped it. They waited until 3 a.m. They sealed off 66 and they went down and they did 35.75. It was a nice little move. It was a move I tried to catch early in the session, and we did a little bit after the gap. I flattened up for the weekend just because I usually do. It's pretty rare when I don't. I just don't like carrying. I don't like carrying gap risk around through the weekend. And anybody who was long into the close on Friday expecting a bounce can tell you all about gap risk this morning. So we flattened up and we did the gap. And I don't mind missing out on the gap. I do like to catch the second leg, but some legs you just can't catch unless you're really willing to go nocturnal, and last night I was not. So what I want to see off the open is these pushes back into the low 50s. You've got volume weighted average price at 55.62. You've got our proprietary moving average in the 5-day, the 5-minute mid-band locked in, call it 47.5. What's more interesting, going back to the daily chart, you now have the break, potential break. So 37.5, they do 37 on Friday, slightly lower high. You take out the 9-day, you close below it, you gap below the daily mid-band. By gapping below the daily mid-band, which is up at 73.74, you give yourself a really good chance for your first close below the daily mid-band of 2020. I mean, look, here's 2020. We've been below it once. That was Iran, and we bounced it, and we took it right back to the highs in the same session. This is a better opportunity because you had weakness on Friday. This is actually follow-through weakness. Do they come back up at some point and test this gap? Sure they do. Maybe not today. But how the daily mid-band through the gap fill reacts on a retest, which will probably come at some point this week, is going to tell us everything about whether this market is ready for an actual retracement, some profit taking, some resetting, where we go down and we deal with the 100-day exponential moving average and the 50 that are locked up there around 32.06. The 50 days locked up, with the lower band at 32.06. The 100 days way down, 31.26. And, these areas for me are pipe dreams. But going upper band, middle band, lower band is very reasonable expectation after this kind of a run-up. So it would be the first close below the daily mid-band if this holds out since, what's that? December 3rd. So it's been a little while. And it's not like there have been a number of closes before that. Until we had this cluster of weakness in and around the beginning part of October, you really had one close below the daily mid-band and then off you go. So, this is profit taking. And what I was just saying in the chat room the last couple of days is you've got this situation over in Asia with the virus, okay? I am not a doctor. I am not like everybody else on Twitter that is suddenly a freaking expert on outbreaks and pandemics and is able to correlate this with the Spanish influenza of 1920, and that's all bullshit. What I do know as a trader is that on some level you have a built-in excuse here to take some profits that people have been trying to find an excuse to take for a long time. They tried to do it here, but the tape wasn't having it. This, with the markets closed over there until February the 1st because of the Lunar New Year, you have a little bit of a built-in excuse to take some off, and the market's doing that. Now, whether it becomes more, whether this becomes more severe, I don't know. What I do know is they have their best chance since December 3rd to close below the daily midband. Okay? That's the big picture. As far as the open is concerned, you need to pay attention to the area between 44 and 55. Well, Mike, that's 11 handles. Well, yeah. It's, right now we're down 1.4%. We've been down a hell of a lot more than that. It's a very fast tape. It's a very volatile tape. If you're one of these people that does not do well in fast tapes or volatile tapes, be careful today. This thing will steal your lunch. It's been stealing people's lunch overnight. Okay? Ask anybody that was long and anybody that traded that chop, including me. So, it's going to, volatile markets work both ways. You have to respect risk. We always have our disaster stops on in our room, and they serve us very well when we get it wrong in these types of situations, because we don't do minus 10s or minus 15s or minus 20s. We don't do minus 6s. The worst thing ever happens to us is a minus 5. And usually that's a wake-up call that we need to get into the other side of a trade, and that minus 5 in a fast market goes away real fast, and you're net green. Respect risk. Pay attention to price. Be flexible. Don't dig in. Don't be an ideologue. Don't sit there today and say, this is the pullback. This is it. We've been waiting for this. Well, that might have already happened. So see what price is saying. See if it keeps making higher lows on the 5-minute chart, because that's exactly what it's doing right now. If it breaks 42, though, it should go back to 35. But I'm probably on the sidelines until we open. I want to get a basic look at a regular market after the bell rings, even though it is a Monday morning market, and I'm not a particular fan of those. All right. Take care. Trade them well. More stuff out on social. As an LA guy, rest in peace, Kobe. It's a really tough day yesterday. Really tough day. Take care. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.